And let's focus in on some stocks that are seeing big growth expectations in earnings and sales. Courtney Donahoe is back now, and she has more of those stocks for us. Welcome back. How did you find these?
Well, one of the things I love doing is going into the Bloomberg and using our equity search to be able to find a lot of these companies. Now, if you are familiar with the Bloomberg and have a Bloomberg terminal, the function that I used is EQS Go. Now, some of the things that I looked for was 5-year average sales growth. It had to be greater than 25%. Another one that I looked for, 5-year average earnings growth. That also had to be above 25%, and return on equity too had to be above 25%. And I searched through most companies in the U.S. I searched through the S&P 500 index, the mid-cap index, and the small-cap index to find some of these interesting names, Lori.
All right, so let's get to these interesting names.
Yeah.
Netflix.
First one, the mail-order movie company. It's definitely been growing a lot lately. You know, I know my brother just recently started getting his Netflix movies, and they raised their forecast, though, for 2009. They're seeing much greater subscriber growth for the company. And one thing that's really interesting, they increased membership during the recession, you know, when a lot of people are stepping away at this time.
Well,
so
cheap price, high volume, right? Is that the strategy there?
Exactly. And they're offering, they're offering new deals, like prices starting at $8.99 for unlimited movies streaming over the web, plus DVDs, too.
Do they have plans to go digital so that you can actually watch their content? Yeah,
yes,
that's
that's one of the things that are going to be helping them. But a couple of analysts, I was reading a couple of reports, and they said that this past quarter there's been a bunch of customer defections. So that's something to watch. And the term for this is called churn. So the term for customer cancellations. And it was up 4.5% for this quarter, which was higher than average. But stock up so far about 50% year to date.
And the pride of Vermont, Green Mountain Coffee Roasters,
yes,
another one that fit this category.
GMCR, they sell coffee, and they also have a one-cup brewing system called the Koi Rig. It has an unusual spelling, and it's said unusually.
Pronounce it? You know what?
That's how you pronounce it.
This, and it's a savior, especially with my newborn at home.
Exactly.
Needing that extra boost of energy. I shouldn't plug
when
it,
you need when you need your one cup of coffee. Well, they recently completed a secondary offering, and the stock has been under pressure lately. But I mean, listen to how the stock's been doing so far. 149% for the year, 127% for just this past year to date. So it's definitely doing well. Janney Montgomery Scott, though, said, you know, there hasn't been any change in the fundamentals in the company, so the stock really shouldn't be under pressure. But they believe in brewer growth. They also see higher margins and EPS growth for the company.
Okay, we have less than 30 seconds. So True Religion and Hanson Natural are both on the list. So pick what you want to expound upon.
True Religion, we got to stay with jeans. We were talking about jeans before and the new trends in jeans. Even though there's current weakness in retail, company has been seeing strong sales revenue, up 12% for the year. Analysts said that they're continuing to gain market share. The stock up so far 83% year to date, Lori.
A high flyer. Good research. Thanks so much for bringing it to us, Courtney Donahoe.